Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is Tuesday, and we are having a little fun here with markets again. Another week of strength. Yesterday they come in and they keep on lifting them and lifting them. During the webinar, it was kind of chill, I guess you could say. It wasn't that exciting, but then all of a sudden, as I think it was like the last 10, 20 minutes of webinar, the Dow moves up like 80, 90 points. And then through the day, they've been buying that Tech 100 for weeks now. That's what they do. They just keep on buying the Tech 100, because it's underpriced and they need to do something. It needs to be, something's got to be done, I guess you could say, in the sense that it needs to be purchased. So, let's see, what am I looking here? Let's get the chat line up. So pretty much that's, we've been saying that we just don't see sellers. All we see is buyers. Not big buyers, not commercial buyers, but I understand that I heard from somebody that the Goldman Sachs trading desk has $13 billion of bids to buy over the next 5 days. Now, I guess you could say, I'm trying to think, it depends on the time of the year and so forth, but that puts more strength in the market. And obviously the sellers themselves have not been comfortable to sell. Let's get this chat line up. Let's see. There we go. Here comes the chat line. And so what we've been watching is that there's been just buying, and then there's buying, and there's buying. I see Janos, you're in this morning. Good. Nice sip of the tea. And you see the dollar index there on J4X. You can see it's been moving down, down, and down. Exactly what it's supposed to be doing in this case. Oh, what's going on here? Come on, why are you spinning? I want the chat line to jump up, and it won't jump up. I'm going to cancel it and start over again. Come on. Come on, chat line. You can work. Huh. I feel like I should open up another machine. I got one to my right I can turn on. I'm not sure what's going on there. It's sold out. Let's do this. I'm going to open up another machine and see what's going on. I'm not sure why. This particular machine of late has been doing that. I only use it for email and the webinar. I have two machines literally almost dedicated just to the webinar itself. Let's get to the chat line. There we go. Nothing better than a good old alt control delete to straighten something out. But we'll see what the chat line says on another machine. Let's move that over there. This machine I use to send out my charts. Let's see. Or not charts, the spreadsheet at night. There we go. Let's do the alt control delete again on that one. It's a horse race now to see who can give me the chat line. Let's see, Dukascopy. You're here somewhere. There it is, trading. Dukascopy webinars. Bingo. And please wait on the other machine. I'm glad I've saved all things on that because it's being weirder and weirder each day. Alright, there we go. And now whoa, where'd that sound come from? Let's kill that. Come on, sound. There we go. Wow. That sound was way too loud. There I am. I see the hellos. There's Janos. Doc, how does the system take into account earnings? We've always said, this is part of the philosophy of from the early days of being on the trading floor, and there was always fundamental. You had fundamental. What's the way to describe it? Fundamental. Statistics. Information coming in, and you always kind of. There was an anticipation of what earnings were going to be, and then so that it was we called it a consensus of the managers. Remember, basically earnings is more of the managers and what they think, what they work on. And what the managers think because they kind of telegraph it over the, how do you describe this? They telegraph it over time each quarter. So in other words, money managers go out and they forage. They go to companies and they talk to the chief financial officer, or they talk to the chief head of accounting, and they have interviews with them. And that's how they decide. In other words, people think that money managers sit in their office all day long or lay on a beach somewhere all day long and they just read things and that's it. They're out on the street. They're out on the street interviewing. They have, let's say, let's say they're managing a few $billion or $10 billion, and what they have is they have money managers looking. They don't just have one person; they have half a dozen. And what they're doing is they're talking to companies themselves that they're invested in. Without a doubt, there is a true dialogue going on between them and the company, and that's why they changed the law back in the early 2000s. What they call fair disclosure. That's the actual rule. It's called fair disclosure, and a chief financial officer or a chairman of a company or an accountant inside the company cannot say something to the money manager without disseminating it to other money managers now. And it used to be that they would just disseminate information to to themselves, to the ones that asked, and didn't disseminate it to anybody else, or they favored people. So earnings is built in to the price. In other words, they're paying attention the first month. The second month comes along, they're watching sales and they're looking at expenses. Has there been new money come in for a problem? Did they lose a factory because of a fire? Was there a lack of sales in a region because of bad weather? All these mechanical things pay attention to earnings, and it's being fed into the price of the stock throughout that whole time period. Then, like today, Microsoft reports after the New York close tonight. Well, that number just wasn't fabricated in the last 6 hours. That number has been building and building and building, and it feeds into the price, and they have a general idea of what the sales are. That's why numbers are pretty close in many times. And earnings and so forth are very close. And then Yano says, like stock earnings season. Exactly. Relax time. Hey, relax. Hey, Robin. Legend. Hello. So why do you separate PCs and just connect it all into one system? Because my sons gave me grief about that. Not my sons. One son gives me grief about that a lot. And yesterday I was down in his office. They have their private office for the company that they've started. They write. Anyway, it doesn't matter what they do. So I made a joke to one of them about, how come you have two laptops going, not one? And he said, well, because I have two different areas that I'm following. And I said, well, you complain to me all the time that I have 5 computers going, and then I have a laptop, and I screen share into them to network. But if I'm one of my areas of what I'm doing is trading, all right? Another is I'm doing charting for Chicago Quant. Another is that I'm using that charting to trade with. Okay? All right, so do I really want the computer that's doing my charting because I read something on the Wall Street Journal or I read something in Zero Hedge and my machine gets jammed up with something going on? In other words, I download something and it screws it up. Now, do I really need to have my whole network go down because I have them all networked together, or just keep them all separate? I can screen share into each one when I want. And so, in other words, I'm trading, I'm data mining, maybe doing some programming, I'm doing some research, I'm doing some simple reading, So in other words, why allow one machine to interfere with 3 or 4 others and stop and it hurt me from working? Because I'm from an era that believes that work is good. So, do I really want to shut down my whole day because I had to have them all linked together for I have no idea what reason? Because I can easily screen share into each one of them separately or together, but not tie up my hard drive and my processors and wreck the whole trading day because I chose to be lazy. I think that's the answer to it all. Because I'm not lazy. How's that? Why do you separate PCs? Because I'm not lazy. You see, I am considering buying something new and using a laptop as a backup. I say that if you're trading, do it off of a different machine to your left. And if you're doing research, do it off of a machine to the right. Because what happens if you're doing research and you're downloading a report from a company and it's corrupted and now it jams your whole system up? Then imagine if you're doing data mining and researching, articles at the same time. Do that off of a third machine. Let each machine do its job. This way your day's not screwed. How's that? That's pretty direct, isn't it? From what I heard, the disclosure rules are being broken constantly, and money managers do have insider information. Meanwhile, retail investors are used for liquidity. Well, I want to say that you're pretty much right. There's always going to be, how can you stop two people who've been working together, communicating, and all of a sudden they go, well, I really can't tell you what sales were like in Des Moines, Iowa, or I can't tell you how our European division has been doing really well in the Czech Republic and Slovakia. I'm not allowed to say anything about that. Are they gonna? It's kind of like George Orwell. Are they gonna put a microphone in every office to every person that collects data and try to inhibit them on some level or another? It can't happen. I agree with you. Matter of fact, that's why they put fair disclosure in there to begin with, was the freak out that that what was happening was there was too much comfort, they used to say, between money managers and corporate managers. They said there was too much comfort there. And you don't know what kind of, payoffs. I remember in those days you could hear stories about someone receiving money. In other words, let's say you're invested in a company and they're going to have fantastic news. And the guy says, I can't really buy it. And the money manager says, I'll buy it. And then, I'll pay for your, season tickets for the football season or something like that. Or, what they refer to as soft dollar them. Yeah, it's very hard to stop that stuff, Very, very hard to stop that stuff. So I don't know if, they created the rule to try to slow down information sliding out, and did they? Yeah. Is their money manager still doing it? Yeah. I think they call that life. Here, let's bring up an interesting conversation. And we're not looking at the charts at the moment more than seeing the dollar index up on both screens. But here, let's bring this up, and this train of thought right here is, imagine, um, oh, I had something brilliant in my head. It just disappeared because I went over and clicked on a different machine through screen sharing. But imagine that money managers weren't able to soft dollar. You're still going to have interplay. There's always going to be somebody telling somebody some information. It's always going to be there. But the markets overall, I go back to your original question. Doc, how does your system take into account earnings? Well, someone asked me a couple of days ago about fundamentals versus technical analysis. And I would have to say technical analysis has become so much better now and so much clearer. And fundamentals, as yourself, Janos, has made videos about how you can't trade off of it more than a couple seconds sometimes. It's just not strong information. Roger that, Robin. Be right back. Cool. So, it is what it is. It's just a marketplace in the end. That's the way I feel about it all. It's just a marketplace, and I don't really take it too serious one way or the other. I really don't. It's just part of the. Insider trading is always going to occur. Matter of fact, what did I say? Someone said something about Alexander Hamilton, and I came back to them and said, maybe it was over the weekend because they were talking about. Oh no, it was you, Janos, Sunday night, and I said he's the first documented insider trader, Alexander Hamilton. You said, yeah, but he could fight also. Remember that when I said that? I mean, that's really what it comes down to. Alexander Hamilton, what they did is they gave soldiers bonds. Remember, stocks weren't really traded back then. The New York Exchange was a bond exchange in the beginning, and then they started trading stocks. Philadelphia was the big, stock exchange in the United States. And so, New York Stock Exchange became popular because as time went on, they had locations. Ships got into New York Harbor faster than they got into Philadelphia Harbor. Just by half a day or, 2 hours. So it made it tough, And so they were ahead. And so they were trading they were trading, I guess what happened was they started trading London stocks and stocks in Europe. But they were trading bonds first here in the United States in the very beginning, in the first days of the success of the war. And so what the government did, the Congress, they issued bonds to soldiers. And they said, here's a bond. This bond is yours now, and you can sell it. Or hold on to it and, collect interest. And talk about really sophisticated concepts. Imagine if soldiers today were given treasury bills once a month, and they could spend the money or just spend the interest off of it, and then they could build up big piles of money. So what happened was there was a question mark about who was going to guarantee them. At that time, government did not guarantee their bonds. So the price of the bond, not the interest, but the price of the bond would go up and down when someone would come out and say something about it. And Alexander Hamilton kept on telling people, I keep on asking Congress to pass a law that will guarantee that the bonds will be backed by the U.S. government, but I don't know. Now, he was making up stories. And so Alexander Hamilton, I'm going to put the euro up on the chat on the screen now as I tell this story. And it all plays into it. But in the end, what happened was that Alexander Hamilton was, when he would put out stories in newspapers in local areas about he's trying to get the government to guarantee the bonds, but they haven't done it yet, some former soldiers would get nervous and they would sell their bonds at a lower price. And what he was doing is he was going around gathering bonds at low prices. And then he knew, as Secretary of Treasurer, I guess it was at that point, that they were going to guarantee them. So that, he bought them for 50 and 60 and 70 cents on the dollar. And then the government came out and guaranteed them. And he had them all, because he was making bad stories about how, it may happen, it may not happen. And then he doubled his money. Matter of fact, I think that's what stopped the duel, right? Alexander Burr was the vice president of the United States. Dueling was still legal. I think Hamilton, he called Hamilton a thief or something like that. They had a duel. The vice president was killed in the duel, and they outlawed dueling. So it's all tied together. Insider trading, dueling, the whole bit. Funny stuff, huh? All right. There's the euro. Let's get the euro up on J4X. But you're really asking about human nature in the end. Are there going to be people who try to cheat? Of course. If you put a rule in that stops them, most of the people are not going to be cheating. But there's always going to be games being played. If it has something to do with money, there's going to be people playing games. So, matter of fact, there was the same thing in physics. That's what made me develop my mathematics at the time. They were trying to play a game. They wanted to crash two particles together and think that it would explain like an egg. They thought they could crash two particles together and get an answer. And then I had a topology professor out of Caltech in a little private, in a small invited class of 8 of us for the semester, show us how they had fudged the math, how you could fudge the math of atomic theory. This was back in the mid-70s. At the time, we were fighting the idea that accelerators really worked, and I was using the accelerator at Princeton, so it wasn't like I wasn't familiar with the accelerator. I just didn't believe in it. I thought it was a stupid idea, and a lot of us did. And that's why it ended up in Europe, because the only way they could get it done is to move it out of the United States, build CERN in Europe, and then just give foreign money, the American government would give money to it over time. I mean, it started off at, I think it was like $300 million, which was a big number back then. They were going to build it in Princeton, up along Washington Avenue. And there's a mound there to this day. It was going to be like, 4 or 5 acre. I guess it's bigger than that. It's probably like 80-acre lot. They were going to build it. And they called it the tokamak. But anyway, I started my math, the chase after that. And then in the end result, I ended up using it for own finance. So where there is money, there is a way. People will try to do all kinds of things. And that's the way it usually works. All right, there's the euro. You can see the euro has been very firm. We were talking about that yesterday, how the euro is holding up pretty well. Now, yesterday you can see it even spiked, and in the end result, still closed at the high of the day right there. Not the high of the day. The high of the day is way up here. That it closed up for the day from the previous day. And you can see today it's pretty much like unchanged, Whereas when we looked at and you see the same thing, looking at J4X, you can see the green line through the dash line. You see the strength. You got 4 days of green hinkies. Same stuff as what we're showing here. Where it's through our line there, 4 days back, that type of thing. You see that strength. Then you go over to, say, the cable. We noticed that the cable yesterday was, anemic. I guess that's a good way. It's my pre-med days, anemic, before I went into the physics and mathematics. It's kind of like leaky. It's not strong. It's weak. That's and in the cable. I was kind of surprised when I saw the cable yesterday acting. So you can see a red there today, and I was really surprised because yesterday it pushed into the cell, and I was like, wait a minute. Why are we seeing this weakness? See, this is the second day for us now in that cell right there. And you can see over here, it's 1 day into the cell now. And you can see it's at the top end of its range. You can see the green line underneath. And I'm like, why is the euro basically gaining and the cable's losing? And then we saw the Swiss. As I take another sip of my tea, we saw the Swiss yesterday, doing the same thing. The Swiss was moving up, losing against the dollar, and it was like, wait a minute, why is the euro being favored? And it happens that way too sometimes. You start to see it, and you can see it here. There it is on Chicago Quant. You can see that. I think we went into the buy yesterday, right there. We missed it the day before that. I think the line was through. No, it was still underneath. And so you can see there, went into the daily buy yesterday, and it gave us the volatility signal the day before. Right there, and there's the sell there. There we go. And there's our lines of it. And then you can see let's tighten this up a little bit. You can see it's still flirting. It's been in that weekly sell since the major top from Credit Suisse. And then let's put it up on J4X. Right there. And there it is right there. You see that, that strength lifting up the last couple of days. Again, a little of a surprise. In other words, if it was marching along against the dollar, in other words, it's acting differently against the dollar than the euro. The euro is gaining against the dollar. And right now we got the Swiss and the cable losing against the dollar. And I think the yen is doing the same exact thing. Now, remember, it's the Lunar New Year, and so most of Asia has been closed, but Tokyo was open last night. They were just closed on Monday. And so Tuesday's closed now at this point. It's, It's 10 o'clock in the evening in Tokyo. So, there we are. And let's go take a look at the yen. And there's the dollar yen. You see, it's doing the same thing. It's losing against the dollar. So it's like, what? In other words, to me, it's like an experiment. Why is this bubbling and the other three are not bubbling, why is the dollar stronger against those three but not against the euro? And again, we always talk about this. The European Union is the second largest economy in the world. I know a lot of you want to pretend that China is, but it's not. And it's not even close. And but the ones that want to spin the news and come up with wild stories try to tell us all the time how they're going to overtake the world, but for some reason only 2.5% of their currency is able to be traded, and it's a fixed currency to begin with, and it's fixed to the dollar no less. So who comes up with these boneheaded ideas that China is going to be a world power in the financial community? I have no idea. And again, then they try to throw that stupid idea that, well, they have 1 billion and change in people. They have over 1 billion people. Oh boy, with an income of $13,000 a month. Or is it a year? A year, I'm sorry, $13,000 a year. And it's like, well, then the Commonwealth in India has more people, and its income is higher by like $3,000. So why don't you love India even more than China? Because India is not communist, so it's not socialist. Well, it might be socialist on its own level, but whatever. And the end result is not very good there. Did you hear that the recent news about Taiwan air defense system? No, oh, hey, Robin. No, just what to be honest, I hear all kinds of stories all the time. Were they penetrated, or they, I know that they told Beijing about a month and a half ago that, we have rockets that will hit Beijing just as easily as you trying to hit us. Taiwan had brought it from Swiss company. Oh, yeah. The thing broke. They sent it to the Swiss, who could not figure it out, and sent it to repairs to China. Well, that means that they're all using a piece of junk then. But, they've got, Japan now is aligned with Taiwan and the Philippines, and they've got, all aligned fighting forces. Did you hear that we've been putting frigates into the Straits of the China Sea in between Taiwan now, and China's shut their mouths. Remember before they said we weren't allowed to be there? So we sent some frigates through there about a week ago, and China said nothing. It was silence. So no, they sent the equipment to China. How do you know that's not a what do they call that? There's a name for it. I can't remember it. It's an espionage name. How do you know that they didn't fake the break, send it to China with bad technology, and now Chinese are trying to copy it, and then it'll just blow up in their faces in the end. You know what I mean? That would not surprise me any, but a ruse, yeah. And believe me, there's plenty of smart people on our side thinking of crazy ideas like that. No, believe me. Believe me. And so, in the end result is that I don't, I don't see any. Taiwan will do fine. Matter of fact, Speaker McCarthy, the new Republican Speaker of the House, is going to Taiwan. So, remember the last time they threatened to kill Mrs. Pelosi, and I think the majority of Americans said, "Go ahead, we'll shoot at you later, kill her first." And so we were all laughing like, you threatened to kill the Speaker of the United States, and we don't like her to begin with, but we'll wait until you do it first, and then we'll punish you. I mean, what's that old saying about when given lemons, make lemonade? That's the way we felt. Oh, well, if Mrs. Pelosi gets killed by the Chinese, we'll make a nice statue for her. There's a lot that would pay for that, yeah. I would not, of course, because I'm a good, God-fearing man. But, no, I would not wish it. But if the Chinese did it, I would punish them afterwards. I would not preempt. So, no, I hear you. It's crazy stuff. And you just have to wonder, though, and talking about the currencies again, why is the yen right now losing against the dollar? Why is the Swiss? Why is the British pound, but not the euro? Because, there's obviously, maybe earnings season. It could be as simple as earnings season in Europe right now. By the way, what is up with the yuan? Well, it's just fixed. It's just a fixed currency. It only trades 2.5% a day. There's not much. There's not much that they can do. They can only pretend. They're not going to create a petro yuan / gold yuan, because that means, I said this yesterday, they'd have to deliver it, and they're not going to deliver it. And now you want to hear the blind leading the blind. The Argentine currency merged with the Brazilian currency. You can't even get a quote on the real to begin with half the time. I mean, Dukascopy doesn't quote the real. Google does. Google says it's trading at 0.15 to the dollar. So it's like 15 cents to the dollar. And the yuan, I think, is 18 or 19 cents to the dollar. But they're both fixed to the dollar in the end. They're not going to do anything. Look, no one is going to create a currency where they have to deliver gold and oil unless you produce gold and oil and you use it as a selling point. But then you have to guarantee that you're going to deliver it, because arbitrageurs are going to step in and they're going to want to exercise it. And if you can't exercise it, then they're going to crush the currency. You're going to lose face, like in that Asian expression. You're going to lose face, and people will be, look, the best way to describe China is an angry American colony who hates America. That's what China is. And it's pretty obvious. If we don't buy $200 to $300 billion worth of product from them a year, they go bankrupt, because no one else is going to do it. You think European Union is going to jump in? And I think I've seen the numbers. What is bought from Europe, it's like $30 billion a year or $50 billion a year. And they're fighting right now. Germany's fighting with China because they're not happy with the currency translation or something. They want the Chinese probably want the Europeans to buy yuan to buy the currency. Well, that's like paying a bribe. That's all it is, because the currency doesn't float. So in other words, whatever the bank of the People's Bank of China says the value of it is, it is. How about the times I was showing you where there was a point when inflation was exploding, and for 3 months the yuan didn't move, and then all of a sudden, finally, someone woke up over there in China and started moving the yuan to adjust for inflation. Hey, Doc. Hey, Denny. Denny's? Denny's? I like that. I'm new here. Sounds like a nice podcast. Would you consider the possibility that euro is being bid for the reason that after Davos and reassurance of German Chancellor flows are going into euro? Could be. Yeah, it could be as simple as that. Yeah, because we're seeing the other currencies of the last couple. This is just it's a daily thing, not anything major, but we're very bullish on pairs and not on dollars overall. So let me go back to, let's see. It makes sense to me. I think that does make some sense. If that was the case, how would I be able to see where the money is going? Well, that's going to be harder because you got to imagine it's in both. The pair that's buying they're obviously selling some dollars and they're buying some euros, and so the dollar, as far as I'm concerned, needs to go down anyway. It's overpriced. And let's put a chart up there for you, and we'll just show you. Here's the DXY. That's the dollar index with the 6 currencies. So it has the euro is 50 some odd percent of it, or 48 or 53% of it. The yen is something like 20 some odd percent of it. The cable, the British pound, is something like 15% of it. The Canadian dollar is something like 10%, and then the kroner and the Swiss are like 4% each or something like that to make the 100% of the index. And here's the index. We always usually start off for the day. We look at on this webinar. We look at the dollar index itself right there. There it is, up on the J4X. And this is Dukascopy's platform right here. And what we do is we've created a couple. We compiled a couple of indices that work better than MACD and RSI and moving averages and so forth. And what we do is we overlay the chart itself with Hinky-Ashke bars. Okay, and so it's like an atomic type thing. What they do is they take the root of it and then they square it or something like that. So in other words, they take the open, high, low, and close, and then they average it, and then they square it, and it generates it. So it's kind of a smoothing of the price action, okay? And it matches up about 65% of. Let's go over to our Chicago quant charts. That's what we're showing over here. And let's go show you that. Where's it at? Right here. Right, where are you at? Let's scroll down, and this is the dollar. We don't get the dollar index. We don't pay for that. We get the Chicago Mercantile Index because I want to see the second one instead. And so what happens is that this has 7 currencies in it. I think they add the Australian dollar, so it's identical to the DXY except for it has the Australian in it, and probably a little percentage difference movement, that type of thing. All right, now you can see here we have little dots. That's our proprietary mathematics. And then we have our proprietary gas lines, which are our indices, our algorithms, really. They're our algorithm indice. And then down below is a weekly chart right here of the same product. So in other words, this is a daily algorithm, and this is a weekly algorithm. We put a pink line in when it goes into a cell, reminding everybody that it's below the 0 line. That's that white dotted line right there. And when it goes into a cell, which is, it went into a cell here on a weekly, then it climbed back into a buy, then climbed back into a cell, and has been in a cell, and we redo it every week. It tells us throughout the week live, actually, constantly if it's moving up through it or down it. You can see here, it's been in a cell since back in, November, going from October. And then this is the daily doing the same thing. And when the daily and the weekly line up, we tell you to take the shorts. But don't take the longs when we're in a weekly sell unless you're using derivatives like options or binaries. And so we have a bunch of simple rules to follow our mathematics here. At the same time, you see it over here on J4X. You see the Hinky Ashkies match up 60 some odd, almost 70% of the time to our dots. And then what we do underneath here is you're going to see the green line here is a fast-moving stochastic. I use a fast-moving stochastic to smooth my formula out. So it has a lot of similarity. You see it bottoming here, and we bottomed, back here. And let's see, what's that bottom? The bottom is in January 13th, is it? I think that's what it is. And you can see back here, it does the bottoming, and it's like January 10th, something like that. No, what is that? December. So it's been bottoming. Whereas this kind of bottoms and then does that. It's let's put it this way. And then the dashed line is a slow moving stochastic. And we can show you the parameters of it so you can emulate it. And so what happens is that it emulates our math by about a little under 70% of the time. And it's slower more than anything else. It's like 2 and 3 hours slower, half a day slower sometimes. But it's better than MACD or RSI or parabolics or, I think Dorsey-Wright X's and O's can be a little bit more accurate than MACDs. They are more accurate than MACDs and RSIs and so forth. So, but they may be competitive with this at the same time. We could probably throw an XO up there if we wanted to dedicate the time to figure it out. But anyway, that's what we're looking at here. So we look at my mathematics, which I've been using for over 50 years. I invented and used it to trade on trading floors across the United States. And when I was in the hedge fund industry, up at the hedge fund, we made lots of big money on that. Jimmy Simon type of money. And so that's why we look at both. We look at this for people who don't have an opportunity to access our work, or they choose not to. No matter how you look at it, they're not accessing our work. But you can tune into Dugoscopy for an hour a day and see our work in a lot of different products, and you can ask to see anything you want to look at. So if you want to look at gold or oil or a stock or if we can get it on our machine, we'll show it to you with our mathematics. So that is that. I'm thank you for the compliments, and I like the point of view too. The euro, it could be as simple as some money is moving in on the euro because of the Davos situation. It could be that. Davos has become an echo chamber. Unfortunately, back in the old days when Davos was real, it was a lot more fun, and it made sense. You went there to, as a hedge fund, you went there to bring in investors, get visibility, that type of thing. Now, they're doing all kinds of crazy stuff, talking about something that's not in physics, that's for sure. There is no such thing as renewable energy. It defies the laws of physics. You can't destroy or create energy. And so forth and so on. But that's all right. It's a free world. Or at least I'm American, so I say, you're allowed to say what you want to say when you say it. We don't have to listen, that's all. So that's what the First Amendment's about here in the States. So, again, thank you for the compliments, and I like your idea. All right. So, where are we at now? I think we left off at the yen. So, from the yen, we go over to the Turkish lira. Let's take a look at the Euro-Turkish lira pairs trade. But if anybody wants to see anything, just say it. Well, believe me, I'm a motor mouth. I will look at anything. I will talk about anything. Let's see. Let's put it up over here. And there is the Turkish lira. Not there it isn't. There we go. Oh, I don't think we even showed you the yen. So there was the yen right there. You see the yen went into a sell there, then went back into the buy here. I forgot to put the line down below. And then it's been in the buy for like 5 days now. It's been pushing up. It's more like a triangle. It's not really going anywhere. But it does seem to be the action we're seeing. Here's another one too. It's Lunar New Year. Maybe Europe was, you know how like China and so forth is trying to move away from the dollar. Maybe they were buying more. Maybe they were selling the other pairs and buying the euro. I mean, there's most of most of Asia has been closed for the last couple days. So for the holiday, only Tokyo was up. Excuse me, Tokyo was open last night. All right, from there, let's go to the Turkish lira, and there it is right there. You see it on J4X. Let's see who was ringing. I'm not picking up either way. The only way I'll pick up anything is if it's off the cell phone, if it's important. But I'm not. I will not interrupt my webinar from it. So what happens is that the dollar yen there. So now let's get Turkish lira into that chart right there, and as you can see there, it's played with almost all-time highs yesterday. In other words, unfortunately, the lira is losing money when it goes up, and when it goes down, it's making money. Now today, you can see they're putting a little pressure on it on the good side of it. It's almost unchanged. I got a red dot. You see the green line is trying to pierce the zero line right there. We've been in that weekly buy now, though, for I don't know, 3 months. Let me just show you there. I put the zero line in too. It went into the weekly buy. Let's kill that one line and put it right there. It is right there. We went into the weekly buy in the middle of October, basically this week in here, down in this. I guess you could say it was in the 17s and 18s and as low as 17.2. And 16, there's a low there the day afterwards, 16.56. There's been some liquidity problems too this last year now in the euro. That's why we pay attention more of the euro Turkish lira than we pay attention to the dollar Turkish lira, because when you look at that chart, oh my God, it's hideous. I mean, it's very illiquid all the time. So obviously, it's got something to do with international situation there. Let me think. What else we got going on? So that's the Turkish lira. We always say location, location, location. You've got European Union parked on Turkey's doorstep, so you would assume that the currencies would be much more liquid. Because it's you don't have to travel. Whereas as the dollar Turkish lira, if you're going to ship something to the United States, you got to send it 6,000-7,000 miles away. Whereas if you're using the euro, you can just jump in a truck and drop it off. Drive it through a couple of European communities and boom, you're there. All right. From there, we drift over to two currencies that are sloppily of late following commodities. We have we watched the Canadian dollar against the oil contract in the United States, West Texas Intermediate. And so you can see here it moving down like this the last couple of days insinuates that oil has been moving up. And when you look at oil, so you see it right there. Let's put oil up on J4X. There's light. Yeah, that's it. I think that's it right there. Yeah. There you go. And so oil has been moving up. And that's British pound. Where is oil? Light right there. There it is. And so there you go. You can see that oil has been moving up in value. And you basically have, you can see it here, you have Canadian dollar, moving up and down, of course. But notice that the closes, obviously, you find ways to be lower at times. So we're down towards the low end of the ebb. It's been going down in value. You can see the whole slope there is that way, matching up to the slope of a rise in oil. And then usually, on a given day, they're almost matched to match perfectly. And then what we do is we watch gold. And we're going to throw gold up on the screen here on J4X. And gold, where's it at? Right. Gold, where are you, gold? I just saw you. There you are. And gold, trading at 1936 offers with 1935 sevens bid, that type of thing. And you can see that the trend has been up. And up until the political discourse, the cash calamity in the president's office in South Africa. There it is right there. And there's the dollar Iran situation. And we have a chart here, and you can see normally it always followed it even more perfectly. If the South African Rand was going up, you could almost guarantee gold was going down. I mean, it was much better than the Canadian and oil. I mean, it was very lockstep. And then all of a sudden, right here, this problem occurred. They found $500,000, actually to be exact, $520,000 of cash sitting in the president's office, hidden underneath a cushion on the sofa. And I guess someone was coming through the door. He shoved it underneath the sofa. I guess the policia or whoever came in there asked to look around the office, or they probably had a warrant. And that's why the currency leaped those 2 days like that. Now, we know, you can see here's gold. Gold has been running fine, and it was doing the same thing over here until the political news got going. You can see gold, was moving down, the Rand was losing value, gaining value against the dollar. When the Rand goes down, it's gaining against the dollar. And then this occurred. And ever since then, it makes no sense. Matter of fact, you can see here, the Rand is going up, and you can see basically gold is still gaining. So in other words, after a couple years of us watching this and looking at it every day, it stopped working because of this politics $500,000 cash thing. At first they thought he was going to resign, but like all good corrupt politicians, the first thing they say is, I'm not resigning. And so for a day or two they thought, oh, he's going to resign, there'll be a new government, blah blah blah, but that didn't happen. So he's still president, and you can see the currency is kind of whack at this point. Matter of fact, you can see here, if Denny, if you're still around, you can see here the Rand is now trying to get into a buy again. And I don't believe that has that much effect on gold at this point. It's more politics that's messing this up. Because it should be, normally, it was like taking it to the bank. It worked all the time. And it should be right now, it's probably trading like 14.90 something, not 17.26, the South African Rand against the dollar. But right now, they cannot get this currency to follow gold anymore. You can see it. At one point, they tried. It looked like they were starting to get it together again after the calamity, where he somewhere around here he said, I'm not, right in here somewhere he said, I'm not resigning. And then it started to fall again, and then stopped cold, and now it's lifting, but we're not getting that action in the gold. Gold is sideways at the moment. You can see that here. There's gold. And we've been in a buy in it, back here, on the 12th of January, and we've moved up from the 1870s to almost 1950, $75 over three weeks, but the currency is not really reflecting it very well. So that's the sad situation, I guess you could say, with currencies, is that we're really disappointed that they haven't done that. That currency hasn't done that. Let's put it that way. What else we got going on here? I guess, let's see. From there, what we do is we slide over to the last of the currencies. We look at the Mexican peso. The Mexican peso is playing low ends of the range, gaining against the dollar. Ever since Congress, the currency seems to read politics very well here in the States, the Mexican peso, since they're a neighbor of ours. And there's a lot of production between the two countries. So, or activity between the two countries. You don't like the equity rally. I hear you. I mean, I think I started off the webinar saying, a friend let me know that there's like $13 billion on the trading desk at Goldman Sachs for the next... actually, I read it. Someone didn't call and tell me. I read it, that $13 billion is on the trading desk for the next 5 days. So they're nibbling, and I told you I don't think the market is strong. I just don't think it's weak either. I think the equity market is just sloppy. If it's going to top out, it'll probably top out in February. That's usually the norm. In normal years, if there's going to be a rally in January, usually it finds a way to top out in February, and then then you have that vacillating going back down to the lows of January, and then there's then people start rambling about sell in May and go away. It usually happens somewhere between the first and third week of February, and next thing you know, you're in March. So after March, you're in April. And April, people like to anticipate. Markets love to anticipate. And next thing you know, they're starting to ramble about sell in May and go away. Vacations are starting. People are starting to think about vacation and disappearing. The only base you could even closely try to give credit to the rally is the fact that money has to be invested somewhere. No, well, markets, like I said, I'm used to being in the hedge fund industry and on the floors, so we anticipate what's going to come down the road like 2 and 3 and 4 months ahead. We're always looking ahead. Markets are always anticipations of the future, not the past. So, you're basically, this is the last full week of January. Next week starts February, and next thing you know, the markets have are people are going to be walking around going, I guess we should buy a little bit more and not miss the rally. That'll bring in some fresh cash that the institutions will probably lighten up their load and sell what they've been buying for like the last 3 weeks, that type of thing. Markets move that way, and professionals usually move better than public. But because of quantitative easing, I would have to say that very few hedge funds are really making the money. I saw where Citadel made $18 billion in profits last year on $60 billion. So they had like a 30-some-odd% return, which I can say one of my old partners is a partner at Citadel, and they're trading derivatives and they're making markets. So 25-30% returns are not exactly fantastic. It's great for the average investor, yeah, but in the derivatives world, that's okay. I had a hedge fund one time. Actually, me and another guy from the floor had a hedge fund. We made 27% for the year. We shut it down. We were like, this is too boring. I remember some of the other people, from different hedge funds said, why are you shutting down? You can get more money now. It's like, I'd rather just trade for myself. So, it's, when, derivative trading has a different return than, buy and hold investing. And so, like, look at is it Magellan with Jimmy Simons, chain smoking Jimmy? Renaissance technologies. No one even talks about them. They make Warren Buffett look stupid, and their return on money is fantastic. They're like the most successful hedge fund in the world, and no one talks about them ever. That's because it's run by a bunch of me's, math people that trade options and derivatives. So yeah, I can understand you looking at it as a buy hold type of thing. You probably don't want to make much of a commitment. But when it comes to trading itself, it's pretty good, the markets have been decently active. They're not very deep, they're not liquid. They're active, but they're not liquid. I agree with you. You would have to pause and think, do I really want to get deeply involved in the market now? I would say that most of the game is over with at this point. But our math, we follow our math. So, right now, let's go to before we get out of here, it's already past the hour, but let's just take a look at the S&Ps. Here's the S&P 500, and then we'll take a look at the NASDAQ. So here's the S&Ps, and they've come up from 3,800 at the beginning of the year, the trade at 4,000. So, that's been a nice move. We've been in the weekly buy for this, with our fast-moving algorithm. We've been in the weekly buy since the 38.5, and then we've been in weekly buy since the 39s. And so, here we are at the 4,000 area, and that's pretty cool. Now over here, which is just as interesting, it took a while for it to explode. But its lows were no more than 2.5 weeks ago. Our fast-moving algorithm went into the buy in the 11,200 area right there, right? And now we touched 12,000 yesterday. So 800-point move in less than a couple weeks. Our slow-moving algorithm right here, the green line, compared to the dotted line going through the zero line. Let's put the zero line in there. Pretty much, they sold it off down from the 12,000s down to the 10,500 area with our sell here that full week. We put the line at the end of the week on that, whereas on the daily it's at the day itself. So I'm not like buy in January and go on vacation, but yeah, I hear you. I'm not that excited. The S&P 500 looks good. It could be, in some ways, you could probably say that this looks like the William O'Neill. Is that what was that? That's the Nasdaq. So the Nasdaq right here. Let's see, where is that? Right, yeah, that's it. That's the Nasdaq, right? That's the Tech 100. So there's William O'Neill's handle of the cup. So in other words, it met this area here. And if anybody follows good old William O'Neill, I don't know if he's alive anymore, but that was the guy that created Investors Business Daily. And that's probably like if you're hungry for the best of the best in a public arena, you can subscribe to his newspaper, and they have they have their own algorithm, and it works really well. It's a really good tool, and it's a rating system that does really good. But he has this particular formula or pattern. He has a pattern. It's called the cup and saucer and handle. And a lot of times it's right. And when his math is pointing in that direction, that could be a sign that what's that? That's the NQs, that it's got a lot more room to run on the upside. Now let's take a look at the S&Ps and see if there's a cup and saucer. I didn't even look for the cup and saucer. Yeah, same thing right there. That's the handle to a cup. So in other words, you think of this as a coffee cup or a teacup, and then that's the handle. And then he has a math formula that says it's going to run to X particular area. And his whole newspaper looks at the whole stock universe. I mean, from penny stocks to Google. I mean, IBM, AMD, you name it. Royal Dutch Shell, Deutsche Bank is probably in there. Everybody's in there. And so it's called Investors Business Daily. I think they call it IBD. And, it's got a great algorithmic system. So, all right, traders, I'm out of here. It's past the stroke of midnight for me. I'm going to get ready to get trading. So this is Doc from North America. See you tomorrow on Happy to Hump Day, Wednesday. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Bon voyage.